Welcome back to Behind the Checkout, the podcast where we explore the ideas and innovations shaping the future of payments. For decades, card networks have sat at the heart of how the world pays. But today, that center is shifting. Emerging rails, instant payments, and new digital ecosystems are redrawing the map. To unpack this, I'm joined by Hans Morris, managing partner at NYCA Partners, former president of Visa, one of the most respected investors in global fintech. Hans, it's great to have you on the show.
Well, it's a real pleasure being here with you, John, and I love this topic, so can't wait.
So why don't we dig right into the meaty stuff? So Hans, you spent decades at the center of the payment industry. Are card networks truly at the risk of decline, or is this just another cycle of perceived disruption?
Well, I would say, just as people have regularly predicted the decline of the networks, they've also predicted the decline of the dollar. And in both cases, there's good reasons to believe that. But in both cases, neither of those two things, which people believe with absolute certainty, has turned out to be true. And there's some analogies as to why that's the case between those two different ideas in economics, but we can cover that later. But I think that there are obviously some very large alternatives to settlements now, and there's some that have been created just in the last, let's say, 15 years, particularly in China. But UPI and other wallet settlement schemes have now become a very, very important source of payment or settlement. And account to account is growing nicely in several jurisdictions, and we now have Cash App and Venmo and Zelle are all growing at very fast rates and have very multi-billion-dollar monthly or daily settlements in some cases now. And I think stablecoins definitely will have application in certain circumstances, but we'll see. I think there's a lot to be proven out in terms of the attractiveness of stablecoin settlement for many types of commerce. So we'll see. It could, and definitely, I wouldn't say it's it's a compelling use case in really a few examples. But there's lots of things where it's not that good yet, but it might get a lot better, and I'm sure we'll see more innovation around it. But in general, I think that Visa and MasterCard continue to dominate because if you just the complete universal application, its ability to be a source of settlement with virtually no downtime and with a well understood and while not always respected form of governance, it definitely has a form of governance that's reliable, and it enables a predictable outcome for both merchants and for consumers. Where it doesn't work, and I think there's some examples which have caused these other things to grow rapidly, and that's what I'd like to talk about. What are the circumstances that lead to these other alternatives growing rapidly, and do those exist, or where will those exist? And so that's, to me, what we should focus on.
Yeah, people love to bash the card networks, but the truth is, wherever I travel in the world, I can pretty much depend on my card working, right? And perhaps we just got a little complacent because it's not easy having that, very fast uptime, always available system running that's been sitting there for a long time. And I think we often take the card networks for granted, actually.
Right. I can't remember, I don't, this is out of date, but I don't, I know there was some outage in Visa that 2016 or something. I can't remember what year it was, but it was not that long. But really, if you say in my whole experience, and I think Base 2, when that went into production in the US, I think it's been down like twice or something. I'm like, in with trillion, I mean, not trillions, but lots of transactions, and at peak hours, so over 100,000 transactions a second. I mean, it's just it's very hard, it'd be almost impossible to recreate something with that level of stability and that ubiquity. And then, as I said before, and a governance system. Again, it's not perfect, and everyone would love to change some aspect of it, but it works, and it's and people can rely upon it. And so you don't, as a consumer, you certainly don't even think about it. You say, if there's something wrong with this transaction, I can, claim that it was fraudulent, or claim that there was that the goods were misrepresented to me, and I have a high degree of confidence that will fail. If I bought an airline ticket for some small little airline in I don't know, Maldives, and I got there and the airline is bust, I get my money back, which,
Yeah.
with many other forms of payment, you don't, or it's a huge hassle to understand when you get your money.
So what are the macro forces you think are putting the most pressure on card economics? I mean, is it real-time payments, counter count, wallets, regulation, merchant pushback, or is it just the other card schemes?
Well, there's certainly a lot more credible there are many more credible alternatives, which have, in many cases, a lot of money and institutional weight behind them, or sometimes even governments. Definitely the we'll see if the merchant settlement for Visa and MasterCard actually gets completed. That was agreed to a month or so ago, but that is going after one of the characteristics that the networks had, which drives many merchants crazy, which is honor all cards. And so honor all cards says that you have to accept anything under my brand, and you can't just pick and choose which ones that you want to accept. And that has been challenged over, decades, actually. And that has been proven to be quite resistant, even as regulators got focused on this, and antitrust has been a big factor for Visa and Mastercard since certainly the '80s, but it's in the '90s and 2000s where they really started losing a lot, and which led to the IPO of both Visa and Mastercard, so it wasn't controlled by the banks. But honor all cards, but doing away with that, allowing surcharging, I think in some cases, in some jurisdictions, requiring alternative settlement options. That regulation definitely puts the networks in a more a less secure position. In other words, they need to, they can't insist that you take it. They have to persuade a merchant to take a card and show them that's in their interest. And there are certain times when I think this is in my mind actually a good thing in the long run, for even for the networks, because it's saying, like, consumers, particularly in places like the United States or the UK uh, or like Korea and lots of other places, they like uh, rewards, and they end up um, using their card in at places where they not only have rewards, but they also expect a service level, and they can uh, use credit when they need to. But there's a hierarchy of cards which fit some consumers' interests, not always though, and not to the same degree. And there's also, similarly, merchants may react very differently to the interchange fees for different types of products. If I'm selling a luxury product and my margin on it is pretty substantial, I might let you pay any way you want to, and it may be great. All I really want is to know that the customer's happy and you'll come back again, and I've got very good margins. If it's a much tougher uh, margin product, and that difference could make a big, could make up a substantial portion of my profitability, I can either surcharge, or I can just not allow high interchange cards to be used. And I think that's fine. I think I don't think that's going to have a big impact. It may just shift volume uh, from high interchange credit rails to debit rails. I mean, so to me, where I'm sure there are payment types where, in a head-to-head competition, the consumer may find an alternative to cards better, but I don't think there's that many of them, to be honest with you. In most cases, people have found that any type of these settlements, again, for most types of transactions, they prefer to use their cards. I've also noted, though, and this is true even when I was at Visa, that the research showed that many parts of what payment type you use is emotional, not rational. Like people will say, why did you use cash? Why do you use a debit card? Or why do you use Venmo in this circumstance, but not in this one? And it's often, well, that just doesn't fit. That's not a credit card type of transaction. And so the advertising that we ran was to often show you, yes, it is in fact or a debit card transaction, and you could use signature debit to pay it at sports stadiums, which were at that point almost all cash, and it's now completely switched to almost all card. And but there are whole categories that over the decades have been switched from a cash, in some cases cash and check environment, to card, basically by persuading consumers that it's faster and easier for them. And often, ultimately, the merchants come to that conclusion too. It is faster, and in some cases, it might be more expensive than they want, but it has other operational benefits.
Well, it's interesting, like people often ignore how expensive cash is, right? And so from a merchant perspective, I went to a restaurant relatively recently that had an ATM in the restaurant and they only accepted cash payments. And so if you said, can I pay by card? They would make you go to the ATM, take some money out and then pay for dinner. And then I noticed during dinner, someone came out from the back end and loaded the ATM with cash. So they owned the ATM and they were clearly making the money over and over again by recycling the cash, which is very clever. But it has, this cash has got to move around, the death of the penny in the US, etc. It does change things. So
Look, yeah, you can answer your question, but what I think is interesting is to say, what has explained the cases where you've seen something grow, and that could be WeChat Pay or Alipay, or I often point to PayPal and account to account.
Mhm.
And to me, really, what's happened is because there were examples where cards just didn't work particularly well, or cards they weren't accepted, and I think that explains. So let's go back and use a couple of examples of that. So one would be PayPal, which is at the beginning, really the beginning of e-commerce, and when people were buying things on eBay, the eBay merchant was too small to get a merchant account. So they went to Bank of America Merchant Services or Chase Payment Tech or something. They would not. It would take a long time, or they probably wouldn't get one because they only had, let's say, they're doing 20 transactions a month or something, and so the volume's too small. Person isn't particularly creditworthy. They couldn't get an account, and so literally you were sending checks for eBay. You do an electronic transaction, you're sending a check, and so PayPal became a solution to that problem. And I think that also explains at the beginning of Stripe and Square, same thing. You had merchants that were just too small. You had a brand new startup, and they're a day old and want to start accepting.
It was even worse than that, hands to cut in there. And I joined PayPal for exactly that reason. Because in the UK, if you wanted to start your e-com website selling whatever you were going to sell, you literally had to put your suit and tie on and go down to your local branch of the bank to get a merchant account. And they explained to us, some guy who'd been there 40 years, that you were going to do this online website, and they'd never heard of the internet. It was absolute hell. It wasn't that we're too small. I just didn't even know what the internet was at that time.
Yeah, and I think and same thing. Like you could, I mean, when Square when they first had the dongle, it was like cab drivers, but also coffee trucks and Girl Scout troops and all kinds of things that never would have gotten a merchant account. So they had a merchant account, and both Stripe and Square figured out, well, we'll just have delayed settlement. We'll just manage risk differently.
Yeah.
And once my view is you solve a problem for which there's no solution right now. Once you solve that problem and then you get a couple million users, well, now you have your own ecosystem. So there's no question that you could design better rules than the network rules for some subset of an ecosystem. And if you do that, then you play your cards right. You're a pretty important payment company. And I would say that also explains what happened with Alipay and WeChat Pay, because in both cases Alibaba had merchant accounts that they had established, At the same time, you had China Union Pay, which was its own form of bureaucracy and you could not get a merchant account um, uh, from China Union Pay either. It would take forever. And they're really focusing on just very large merchants. And so really they suddenly hundreds of thousands and then millions of merchants suddenly were able to get Alipay and WeChat Pay accounts. And that then led to, arguably, one of the most efficient ecosystems ever created, I think, in terms of the range of things which are now in that universal app, which no one else in the world has been able to create. I think UPI in India was also an example where there was nothing. It was just a cash society, and by creating through a government action an efficient rollout of a national identity and payment system, which is free, that then answered something. Well, you couldn't do that really with Visa and MasterCard. It would have taken a long time to get to that level of penetration in a country like India. So those are all examples of where you're not replacing, no one's going out and replacing Visa and MasterCard transactions with a new payment solution. You're doing something where it doesn't exist. So there's just no transaction. And I often point to people and say, there's two things where I feel you could innovate. One is go after areas where under existing rules, it's just very, very, very risky to transact. So very risky transactions don't happen. And if you can figure out how to make very risky transactions safe, then that's an example, something that would be a good opportunity. Little tiny transactions sometimes are not efficient on Visa, MasterCard. So do microtransactions, or the transactions today are mispriced. The cost does not equal the risk. And I think cross-border, low risk cross-border transactions is another example, something where there's lots of surcharging and expenses for cross-border. And if you can eliminate a lot of that risk or dramatically reduce the risk, then I think that's another category where, again, like stable coins may have very good application.
So leading on from that question is, let's talk about account-to-account payments, because one of the the things being talked about is, can account-to-account payments kill off the credit card at checkout? Is it the next big thing? And we haven't seen that happen, and maybe one of those reasons is it's not solving the problem. Like you said before, there isn't a problem that needs solving there. I think there's a use case B2B, but B2C, is that what's going on? Is that why it's been so slow to take off?
Yeah. I mean, I don't see any reason at all why a consumer would want to do that, really, unless I think the merchants need to make it a more compelling case. And I think one of the problems that I have seen on account to account um, companies is that it needs to be a very clear and well-known and universal consumer proposition. In other words, like if I have to read the fine print and click here to accept, I mean, that I would never do that, which is why I would never, ever, ever use a pull. Uh, sorry, I would never. That's someone from the Merchant Payments Council, like calling me. It's. I just don't see any real benefit to the consumer that is clear and well understood and consistent. And to me, that's what it would take to make it more common. I mean, sometimes you'll get a request, from your garage or gym membership and say, if you do this, but usually it's a pretty
Yeah.
unimpressive offer that they're making to you. And
But I mean, Pays is doing a big push at the moment. It's all over TV, big advertising budgets going out there, and Pays is owned by the people who are also, I guess, members of Visa and MasterCard, right? So
Mhm.
they must have an incentive as well to get this out there and push it. And again, for the consumer, there's some great advertising, but I would tend to agree with you. The consumer needs some reason to do it. And is that economic? Maybe it's cheaper if you pay with a.
Yeah, seamless. I mean, look, I think that Apple Pay, after 10 years now, pretty much, has some very good. I mean, I use Apple Pay a lot. Now, my source of that payment, you can decide what tender type you want to use, but it's certainly made many types of payments more, seamless and many things you're paying in app on your phone. It's just so simple. Transit payments are another. I mean, there's lots of things where they solve a something that's awkward or annoying or difficult. But I think Apple does a very good job of also making clear that you're protected and the consumer is not going to get ripped off.
That's the thing. So, I mean, the card networks, I would say, have unmatched global acceptance, but also they have trust, right?
Mhm.
Consumers trust their card, and they know when it goes wrong, there's a good chance they're going to get their money back, etc. How the hell do you replace that?
It takes decades, and I think that, as I said earlier, the governance. I mean, many people will find something wrong with the governance, but at least it's a system, that you can and it's reliable. And I would say, I mean, even not 10 years, but certainly 25 years ago, you used to bring if you were going abroad, you would bring several, like 3 or 4 cards because you weren't sure what would work, and now I never even think about it. I mean, if I need cash, I just use the ATM, and if you really don't even need to exchange money anymore, and, you never think about, uh, the risk that it may not work, and, that was an issue that, if you went to India, there was, very few cards, and the ATMs didn't work either. That was the other
Yeah.
thing that I found, but, that is now changing quite a bit soon.
But I've still got a stack of Norwegian krona sitting around on my desk that I took out 8 years ago on a visit to Norway, and I couldn't use anywhere because everybody was cashless. And I still haven't used it 8 years later. So,
I
yeah,
I took a bunch of cash to Argentina I think it's about 10 years ago, and not only I didn't use it all, even though you really do you use cash there because you have what's called the blue market, and the prices are much better than the official exchange rate, but all that apparently I could just throw it all out in the street. I could use it for, to start a bonfire that has
that's not where permitting anymore. So consumers might trust and love their cards, but we hear a lot, and merchants like to grumble a lot about the card networks and the fees and the market and the regulators and everything that comes with it. Um, I mean, are the merchants potentially going to disrupt the card companies, or is it basically, suck it up? Otherwise, you can't.
Yeah, I mean, I think that I think, honor all cards gives and allowing surcharging really does give them a chance to direct the tenders to more efficient places. And again, I think it depends a lot on the margin and the business line of that specific retailer and the transaction size. And so, as I said, small transactions can be very inefficient because the debit change can be a lot as a percentage of the total. And certainly credit interchange can too. So I could see that being an area where innovation and some clever incentives on the part of the merchants could change behavior. I think also again, Walmart or other very large Amazon, very large retailers may create their own ecosystem with better incentives from to align their interests with the merchant's interests, but retaining a very strong consumer promise as part of that because that's their ecosystem. I think if you go into you know a high street, you go into Nordstrom's or something, and you're buying a a new suede jacket for your wife. I mean, they don't really care how I pay for that. I would say they want it to be convenient for me. They certainly don't want to create extra friction for me, which may then cause the sale not to go through. The returns are very simple to manage for them through the card, and so I think that's less likely. I think it'll be a long time before that changes. But I also think, said like cross-border transactions, and if we go to B2B applications, which are carded in many cases now, And, I think that the trend, a big development over the past 10 or 12 years has been VCC and having single-use credit cards so that merchants can send out as a payable, cause the recipient to accept cards, which generates income in many cases for that business. By paying with that,
Yeah.
I could get a kickback of some kind because I'm really charging. It's a tax on the recipient, and they do that in many cases because it's 2-day settlement. So the recipient likes the confidence in receiving it. I think that is all very dynamic and could all change quite a bit with more alternatives available to them. And I think I can envision a world where every single business has a different cost to capital, or maybe not every single, but there's big differences in cost to capital, and the cost of their working capital can be very different. So my discount rate for the risk, the transaction risk I might be taking, for the chargeback risk I might have, for the certainty of payment, and also for the speed of that payment, all those I think need to be optimized, and that gets very complicated. And am I taking FX risk here? If I'm accepting a stable coin, do I need to turn that into a yield bearing instrument? What's the cost of that? Do I need to get it into fiat? What's the cost of that? Could vary greatly. So I think it's frankly exciting. There's a lot there's a lot I could see evolving, and as I said earlier, all of the infrastructure around this and the ideas are changing quickly, and I could see the need for quite a bit, new business models to help merchants make those decisions. For example, is something that I could see being very important.
So we like to try and predict the future a little bit in this podcast, which is impossible in payments, but it's always good to try. So fast forward to 2035, global share of card-based payments. Do you think it's going to be higher, lower, fundamentally different, or same as where we are now?
I think it'll continue to grow. I thought to say it'd be higher, maybe not compounding at the same rate. There'll be more competition. Cash will, pretty much, it hasn't totally gone away, but you used to say cash is, favored by all kinds of criminals, lots of other people. They love cash, but now they've got stable coins. Maybe there's no product manager for cash, as they say.
You can't put a stable coin under your bed, I guess that's the other thing.
Exactly. So, but I think there'll be definitely more competition and more. I think the other electronic forms of payment will also increase, possibly faster than cards. But I think cards will continue to grow.
So cards will grow, but what will shrink will be cash and
Paper, yeah.
got it. Okay. Well, really appreciate your time today. Thank you for your insights, and great to see you. And anyone has any questions, feel free to send through, and we'll try and get those answered. So thank you.
All right, John. Always a pleasure. See you soon. Thank you. Bye.